We are now going to see an acceleration of silver through 50, 60, 70, 80, etc. And I think, if you compare on an adjusted level, if silver goes up as much as gold has since 1980, then silver should today be about $250. And I think that's just a start. We are going to see the most massive explosion in the silver price. I call this $50 line resistance line, and it isn't resistance anymore because we've gone through it properly. But the market is still holding it at around $55, $57. I think we're going to see it all of a sudden just explode.
Recent developments in the metals market have revived concerns that the global financial structure is moving toward a turning point long anticipated by analysts like Egon von Greyerz. The surge in silver and the renewed strength in gold aren't appearing out of nowhere. They're emerging after decades of expanding debt, derivative exposure, and currency dilution that have quietly pushed the monetary system to its limits. What once seemed like a distant theoretical risk has begun to materialize in real time, reflected in rising stress across physical markets and sudden liquidity injections from central banks that hint at deeper fragilities beneath the surface. The most striking shift is happening inside the physical silver market, where shortages have become impossible to ignore. Inventories that once acted as a buffer have tightened to the point where industrial buyers, refiners, and long-term investors are now competing for limited supply instead of drawing from comfortable reserves. As Egon von Greyerz emphasizes, industrial demand has grown to a level that far outpaces available production, while paper trading masks the severity of the imbalance. With half of all silver now consumed by essential technologies, from solar infrastructure to electric vehicles, the market is operating under a structural deficit that cannot be offset by futures contracts or temporary interventions. Against this backdrop, the latest dislocations between the paper and physical markets, combined with unusual liquidity moves from the Federal Reserve, signal that the system is entering a new phase, one defined by volatility, tightening availability, and a revaluation of tangible assets. Egon von Greyerz views these developments not as isolated events, but as early indicators of a broader monetary unraveling, where traditional financial instruments lose reliability and real assets regain dominance. In such an environment, gold maintains its long-held role as monetary anchor, while silver, volatile but increasingly indispensable, positions itself for moves that could redefine its role in the global economy for years to come. Now, we present the clips from Egon's interview with Kitco News. Before we continue, please subscribe to our channel and activate the bell icon to receive timely updates. Thank you, and enjoy the video.
I know that's an experiment you should avoid. But we started this business of wealth preservation in the form of physical gold and silver 25 years ago, but I was thinking about it for at least for the last 35 years. Because it was clear to me that as the risk was mounting, as debts were mounting, as derivatives were mounting, that we were getting to the end of a monetary era. A monetary era always ends in a debt explosion, and then a collapse of the currency, a collapse of the financial system, social unrest, etc. So that was what I was talking about already 35 years ago. I came to the conclusion, of course, that gold and silver, to some extent, best forms of assets to hold for wealth preservation purposes. They're nature's money and only money that has survived in history. So, and of course, you talked about silver. We always, of course, the king of the metals is gold, but right now silver is particularly interesting. And also it's interesting to know that whenever the metals make a big move, and that's what's happening now, the gold-silver ratio starts coming down. And the gold-silver ratio is very high now. It's been over 120, it's been 80 for a while, and now it's down in the 70s. And we will see that going to maybe 30 or even 15, the long-term average of the gold-silver ratio. So gold-silver ratio means simply gold price divided by the silver price. So now The movie, remember, I've been around for a long time. 1980 was the first peak we saw in gold at $850, and then silver was $50, and then silver came down to under $10. I think came down to $5 even, and gold corrected also, but not to the same extent. And then again back in 2011, gold was $1,920 and silver was 50 again. So gold had more than doubled and silver was the same, top as 30 years earlier. And again, we had a big correction, always bigger in silver. And now we're again back to 50 for silver, but at over 4,200 for gold. So this is unique. And this is for the first time, silver is actually coming above the $50 level. And I think this is just the beginning. We are now going to see an acceleration of silver through 50, 60, 70, 80, etc. And I think, if you compare on an adjusted level, if silver goes up as much as gold has since 1980, then silver should today be about $250. And I think that's just a start. We are going to see the most massive explosion in the silver price. I mean, I call this $50 line resistance line, and it isn't resistance anymore because we've gone through it properly. But the market is still holding it at around $55, $57. I think we're going to see it all of a sudden just explode. And that's not sensational. That's just a reflection of the demand for silver. The silver industrial demand has gone from 10% of silver used to 50%. 50% of all silver is now used for industrial production. And then the investment demand, there is always a shortage every year. So we're seeing massive shortages in the physical market. And for commercial purposes, silver is, of course, used for anything from solar cells to car batteries to electric and electronic products. And that, as I said, there's major demand. And Johnny, nobody realizes because all of the trading in silver is basically paper. And no one has ever successfully used paper for a car battery, an electric car battery, or a solar panel. So we're not going to, there will not be enough silver at these prices. So they will jump all of a sudden. And so I see silver as just a sign now, or not just of silver demand, but actually it's a sign of the beginning of the accelerated fall of this monetary era, which obviously means also currencies are going to collapse, inflation is going to rise, and markets will also come down dramatically, stock market.
The outlook for gold and silver is becoming increasingly defined by the structural imbalances that Egon von Greyerz has warned about for years. Imbalances now visible across global supply chains, central bank behavior, and physical inventory levels. Gold is emerging as the clearest reflection of failing monetary discipline, steadily moving higher as governments rely on aggressive spending and expanding debt to keep their economies functioning. Silver, meanwhile, sits at the crossroads of monetary necessity and industrial urgency, where tightening physical availability and relentless technological demand are accelerating a shift that traditional financial markets can no longer smooth over. As pressure builds, the divide between real assets and financial promises is widening, and this is precisely the scenario Egon von Greyerz describes as the beginning of a long-term monetary transition. Gold continues to act as the anchor, attracting wealth seeking refuge from currency dilution, while silver, more volatile but increasingly essential, stands on the edge of a repricing cycle driven by shortages, rising industrial consumption, and shrinking reserves. If current trends continue, the next phase may not unfold gradually. It could emerge as a rapid global pivot toward tangible value, with gold establishing new baselines and silver surging as the market confronts years of underinvestment and underestimated demand.
Silver in 1980 went to $50 and then down to $5.
Yeah.
Not many investors can live with that. And of course, people never sell at the top; they sell at the bottom. But this is why, as I said, we told investors not to hold silver, certainly until let's say 2013, 14, 15, or any major amounts of silver. We thought, I think our clients held from 2013, 14, maybe 13, 15% roughly. And now, as you said, I think that comfortably, I see now silver not being just another precious metal, but it's also probably the most exciting investment combined with wealth preservation that is available today for people who want to both protect risk and see a major upside. So I would be happy to be overweight in silver now versus gold. I mean, not in totality, but high percentage that we have recommended before. So certainly 30% or even 35 right now, I would recommend, because we're going to see the ride of a lifetime. And remember, it's not Bitcoin here. It's not speculative. It's not something that can go to zero. It's money. That's always been money for thousands of years, both gold and silver. And it's not, therefore, you're actually having wealth protection at the same time as an opportunity to really make some good returns.
Yeah, wealth, a beautiful combination of wealth preservation and wealth enhancement.
Yeah.
At the same time, and that doesn't come along that often. And I remember when we were in Zurich 3 weeks ago, and we had a chatting to Rick Rule, and he made the point very, very clearly that proper bull markets in precious metals don't come along that often. The last great one, of course, was the 70s, but when they do come along, don't waste it.
Yeah.
Don't waste it.
And we see investors buying when it goes up, and then when it comes down, and you get a really correct. We've seen no major correction lately. As part of my writings and thinking in the last 25 years or so, it's been very clear that it's not an end of a monetary era. Doesn't just mean currencies falling, inflation, and all values, especially paper assets, falling dramatically. But it also means a major upsets in the political system. And we see in Europe and also in North America, we see very weak political leaders. This is part of the era we're in. We don't need to name any names, but let's say that there is basically no statesman in the Western world today, at least, and therefore the latest problems Europe has seen, of course, is the UK now having a budget. Remember, it's a Labour government, a socialist government. And then basically the Chancellor of the Exchequer, which is the finance minister in the UK, said clearly at the beginning of her budget speech, we are going to take from the wealthy and give it to the needing people. That's Robin Hood tactics. I mean, it was nice. It sounded nice and romantic in Robin Hood's days, but today and that's what they did. They raised taxes dramatically. They do everything they can to chase the wealthy people out. 16,000 wealthy people have left the UK in 2025. And remember, those are the wealth creators at all levels, not just the super rich. They're people who start their own businesses, etc. And now with inheritance tax and high taxes, they can't keep their money. So why would they stay in the country? And it's a total disaster. The country only prospers if all classes do well, and if there is actually freedom to act, to open businesses and to run businesses, rather than just to receive subsidies or social security from the government. A person in the UK is now, they said, £18,000 better off by being unemployed and getting subsidies than by working. That's just ridiculous.
Yeah.
But that's what's happening in a socialist world. And I always take East and West Germany as the example. 45, the war was ending, and Germany was Germany was split in two. West Germany, with the help of the West and injections, etc., became the strongest country in Europe and one of the strongest in the world, the strongest economy, whilst Eastern Germany went into total poverty. And that's just an example that socialism doesn't work. You can't just give to the poor. You have to have wealth creators in the country. So, and so that was the UK budget that we just saw last week. Now, if you take Switzerland just had a referendum. You can have Switzerland has direct democracy. Anybody can basically collect 100,000 votes and have a referendum on any issue. That is real democracy. Only country in the world which has this to that extent. It's a very, very sound political system. And basically, this was a young socialist that wanted to tax people with a fortune over 50 million Swiss francs by 50% inheritance tax. So they actually created wealth during the lifetime of 50, 70, 80 years, and half of it was just going to be taken away by the government. But Switzerland is clearly not a socialist country because it was rejected by 80% of the people. And that just shows you, sound political system and people who just don't think that they should grab the money from the government and from the rich. So, I am Swiss, of course, and I must say there's a political system is so unique and so fantastic compared to any other system in the world that I know.
A deeper transformation seems to be building across the precious metals landscape, one that could redefine the role of gold and silver in a world facing mounting financial strain and shrinking physical availability. As capital continues drifting out of over-leveraged markets and into assets with genuine substance, the foundation is being laid for a major shift in how these metals are priced and perceived. Gold appears positioned to establish a stronger, more dominant monetary footing, while silver, caught between industrial urgency and investment demand, could experience an accelerated move that breaks sharply from its historical trading behavior. When supply chains tighten, confidence weakens, and global risk rises simultaneously. Markets often transition from slow adjustments to sudden, decisive revaluations that surprise even seasoned observers. If these pressures keep intensifying, the next phase may unfold far more dramatically than most expect, with gold acting as the stabilizing force and silver emerging as the high-velocity reaction to deepening structural imbalance. As governments, institutions, and large investors search for protection in an increasingly unstable environment, the competition for limited physical supply could turn quiet accumulation into a full-scale rush. In such a scenario, past price ceilings lose relevance and a new framework takes shape, one driven not by speculation, but by necessity. Are we nearing the moment when gold and silver stop following the market and begin dictating it instead? Let us know what you think in the comments. And if this video offered new insight, don't forget to like, share, and subscribe for more updates on this unfolding monetary revolution. Thanks for watching.